I have been trading for 4 years, and out of 2 of those 4 years, I have managed to trade profitably. And in my journey to become profitable at trading, I realized a massive mistake that I was doing, and this was only trading with one time frame. I used to sit there on the charts, and I'd have a list of forex pairs that I'd like to trade, and I'd put it up on my monitor, and I'd just click on the 1 hour time frame, and I would just look at the chart for about 30 seconds and go, no, I don't like that next one. No, I don't like that next one. Oh, this one looks like it has a setup on the 1 hour time frame. Let's just press buy and hope for the best. And of course, this didn't work. Trading with one time frame is so bad because it consolidates you to just one small picture of the market rather than looking at the overall image, the overall story that the candlesticks are telling you across all the time frames. I was only getting this small area of price action where it was just this whole world of price in all these different time frames telling me a story, and I wasn't getting the overall picture, so of course I wasn't able to trade profitably. So in this video I'll explain to you exactly why I've changed from using just one time frame, and also how I use all the time frames to work together to get an overall picture and enter my trade. Now the first thing is time frames work together, okay? Even though they look very different from each other, let's say the 1 hour might be in an uptrend, but the 5 minute might be in a downtrend. It all tells a story together, okay? But you have to be careful. Each time frame has a different role, okay? You can't use one time frame for setup and use that same time frame for analysis, okay? The analysis and the setup should be on different time frames, and I'll explain that to you later on in this video, and I will explain how I use that with my strategy as well. So let's start with the higher time frames. So the higher time frames are things like the 1 hour, the 4 hour, and the daily. Now those are the three time frames I use for higher time frame. Now these time frames are to see the overall picture, what price has been doing in the past day, 2 days, 3 days, week, and even month. With these time frames, you need to stare at them and look at them and see where do I think price is going to go next, okay? Because you're trading and you're pretty much putting money on the fact that you can guess where price is going. So of course you need to be able to have a feeling for which way do you think price is going to go. Like for example, are we at a daily support zone, a daily supply zone? Are we at a 4 hour resistance zone? If we are at a 4 hour resistance zone, are we going to be looking for sells for the day? Are we going to be looking for buys maybe if we're at a trend line and price is bouncing off a trend line? Or we've just swept a daily liquidity, or we swept Asia highs on the 1 hour, and then we think, okay, we swept Asia highs, we're looking for sales, or we've just bounced off a support zone a day ago, we formed a hammer candle, this looks like a buy, I'm going to have a bias for the day of buys. Like if you were just looking at the 1 hour time frame, you wouldn't be able to see all of this. You wouldn't be able to see it maybe if we're at a daily support zone. You wouldn't be able to see if we're at a 4 hour bearish fair value gap that we're in. And you wouldn't be able to see any of this. So you'd be trading this small window of price action. And let's say you're on the 1 hour, the price would be forming an uptrend. But if you go to the daily, the uptrend has moved into a daily resistance zone. On the 1 hour, it looks like, the trend is your friend. I'm going to buy because we're in an uptrend. But instead, because we're at daily resistance, the trend could be reversing at that point, and we're buying at a resistance zone, and then price tanks, and we're like, well, why didn't it work? The trend is my friend. Why wasn't the trend my friend this time? And it's because you didn't realize that on a higher time frame, we're at a higher point of interest, like a resistance zone. So that's the point of the higher time frame. The higher time frame is to do your analysis, to draw on your chart, and to have a feeling where price is going to go. Now, there's three time frames I use, but how do you use them to each other's advantage? How do you work with all three of them rather than just one of them? Well, the daily moves very slowly, okay, because every candlestick is 1 day. But what you can use this for is it is for major points of interest, okay? We're not really looking for a trend because who really cares about a daily trend if we want to trade on the 1 minute or the 5 minute time frame, okay? If you want to be a swing trader, then maybe the overall daily trend is something you want to look at. But for me, I trade the 1 minute and the 5 minute, so the overall daily trend isn't really something I care about. Now, what I look for on the daily is if we're at any major point, okay? I'm talking about a major point of interest is like a support zone, a resistance zone, have we swept liquidity, or is there liquidity nearby? And if any of these things are the case, then that sets my bias straight away for the day. Because if we're at a support zone on the day, I do not want to be selling for the day, end of. Because if I'm selling a daily support, most of the time I'm just going to get stopped out because price is just going to bounce off the support zone. Even if it's for a little bit of that candle, a little bit of the daily candle is a lot on the 1 minute and the 5 minute time frame. So the daily is just looking at points of interest, and that sets my bias for the day. Then I move down to the 4-hour chart, and on the 4-hour chart, I'm just looking for areas of liquidity. I'm just marking them out on my chart. I'm seeing, okay, if we're a daily support zone, is there anything that the 4 hours telling me? Have we just broken trend on the 4 hour at the support zone? Have we had a change of character that we couldn't see on the daily? And I'm just drawing lines on my chart, and I can show you this later on when I show you a trade that I'm in right now. And then the 1 hour chart is pretty much just the same thing, okay? If we're at a daily support zone, I don't really know what the trend is doing on the lower time frame. So if we're at a daily support zone, I can drop down to the 1 hour time frame, and I can see actually that price is just change of character to the upside. We've just broken a downtrend, and now we're forming an uptrend at a support zone. So if I see a change of character, a bullish one, and the fact we're at a daily support zone, this is really, really good for my bias of having buys for the day. So that's how you can use the higher time frames in harmony to look for an entry and to get an overall better picture of the market. Now the lower time frames are simply for spotting setups, entering the setups, and then managing the risk, because you're not going to be doing much analysis on these time frames. If you know you're at a daily support and a 1 hour change of character, it doesn't really matter if the 5 hours in a downtrend or anything, okay? Because the price in the next hour or two is going to respect that uptrend, it's going to respect that support zone, and it doesn't really matter about what's happening in the 5 minute. So the 5 minute is literally just spotting entries, and the lower time frames I use are the 1 minute and the 5 minute. So let's say you have a strategy and you have a defined set of rules and you look at the 1 minute time frame. So I like to start with the higher time frames, do my analysis, and then drop down to the 5 minute, have a look at what's going on, drop to the 1 minute, and I'll see and wait for a strategy. So I wait for a change of character on the 1 minute time frame. So I will see, okay, we're at a daily support, 1 hour change of character to the bullish. I'm wanting to look for buys. Let's go to the 1 minute and see if I can see a setup for buys. If on the 1 minute I see this change of character to the upside and I see a retracement into a fair value gap or an order block, that is my setup. My setup has then been triggered. It has followed my daily bias and my 1 hour bias. A buy setup is formed. I'm biased, but for bullish for the day, this is good. I will then enter my trade. And now I will use the 1 minute to manage risk. So I'll use this to place my stop loss either above the high or below the low, and then the take profit I'll either do on the 1 minute time frame or the 5 minute time frame. And for my strategy, I just put it at the nearest area of liquidity that I think price is going to get to. So it's enough waffling. Let me show you the strategy that I use and how I use the higher and the lower time frames in harmony for a trade that I am actually currently in right now. So if you look at this chart right now, I am on gold, and this is a setup that I used. And for proof that I actually entered this, we can go down to my Discord, which is linked in the description. And on here, I post all my setups I have ever done on here. You can look back for years and years and years of all my trading. I post every trade I take. I've got funded screenshots as well to show that I'm legit. And look, yesterday you can see long on gold at 3:30 p.m. That was what the screenshot looked like on the 1 minute. And then look, this is what the trade is looking like right now. So that is proof that I entered this trade. But more importantly, why did I enter this trade? Well, like my strategy says, we start on the daily time frame and we have a look at what price is doing. Well, I'm spotting major points of interest, and what I saw was that price had a low here and we were consolidating in a range. Now, when we're consolidating in a range, we sell at the top, we buy at the bottom. I was saying, okay, we're getting quite near to the bottom of the range, so we can be looking for buys. And also, there was a low here that we could potentially sweep as a liquidity sweep. So that's my daily done. 4 hour, again, we had a low. I was like, okay, we could sweep this low and then get a liquidity sweep and then go buy to the bullish. Also, we have some liquidity up here that I'll probably use for my take profit. And also, there is a order block down here and a fair value gap here that we could potentially reject off of and go to the bullish. But also, we are in a range, but we're nearing the bottom of the range, which means we should probably be looking for buys as well. Now, drop down to the 1 hour chart. We have the same thing. We have a low here that we could sweep. That has carried through all the time frames. We have lots of low resistance resting liquidity up here, which we could use. That would be helpful for our take profit. And also we have a low down here that I've marked out that we could have potentially gone to. But also we had a little fair value gap here. We also had a bit of a range here that could be used as support if you trade support and resistance. So I had a few confluences from across all the time frames that showed this could be a good trade. So I dropped down to the 5-minute chart. And what did I see? I see price had a very steep down movement. And when price has a lot of steep down movement, usually it takes a bit of time to slowly consolidate back up to where that down move has started before then going down again. And that's just something I've discovered from my feeling of the market from trading all this time. And then finally, the 1-minute chart is where I entered. Now this looks crazy. We've had a lot of candlesticks since then. But what did I see? I saw that price swept this liquidity under this black line here that I marked out. We then came up, we then broke structure above this high, came back down to retest this fair value gap. I actually got in a bit late because I don't know what I was doing. I think I was at the gym actually. But we broke this high up here, came back down to retest this fair value gap with a nice rejection. So I bought, and again, 1 minute is for managing risk. I put my stop loss below the low, and my take profit would be at that low resistance liquidity that I spotted on the 5-minute chart. So that is exactly how you use the time frames in Harmony. Literally took me 5 minutes to analyze the chart together. And if you want to learn the strategy I use, I won't go into too much detail in this video, but it will be in the top right hand corner as a card. Click that after the video, which you can learn yourself. So I hope you guys have enjoyed watching this video. I hope you've learnt a lot, and I really hope you start using more time frames together in your trading. I promise you it will help so much. But join my Discord, link in the description. I post all my trades there. We have a community of nearly 400 members you can become a part of. But other than that, I'll see you guys in the next one. Peace.